The first one that you can see is you've got to avoid bad companies. And there's no shortage of them on the Australian stock market. You might own some. In fact, I'm sure you have owned some in the past. You need to uncover great stocks, and you need to know how to pay less for those great companies. Okay, so the first thing I want to talk to you about today is the extraordinary secret to picking the very best stocks, and if you like, the extraordinary secret to avoiding the very worst. Okay, here's what Warren Buffett said, and there's a lot of quotes that I think are analysed inappropriately. There's a lot of things that Buffett says that are designed to give you the essence of what he's talking about without actually giving any of the secrets away, for obvious reasons. There's a competitive advantage in what he does. Okay, so he says what you really want are businesses earning good rates of return on equity while employing little or no debt. So good rates of return on equity while employing little or no debt. I wonder whether or not you know how many businesses in your portfolio have little or no debt. You'll be surprised to know that there's a large number of companies in Australia generating very high rates of return on their equity with little or no debt. Now, when I'm talking about return on equity, I'm comparing the money, the rate of return that you get on the money you put in a business compared to the rate of return you might get for putting your money in a bank account. So if you put your money in a bank account right now, let's say a term deposit for 90 days or a year, for example. I know Westpac's got a term deposit at the moment for a year that offers 6.4%. The return on your equity is 6.4%. Your equity is the money you put on deposit. That's your equity. The return on it is 6.4%. There are companies in the Australian stock market today run by very, very good managers that are generating 85% returns on equity. Now, you can't get that in a bank account, but that's what you're trying to achieve.